Hello, everybody. Nice to meet you. I'm going to go back to the first slide. So thanks to all of you to have joined us today for this presentation on how to prepare and file the Global Information Return. It's been a long year of series of webinar for Algonomia, so it's really cool that so many people are connecting. Next week, there is also going to be another one on how to standardize and automate the transfer pricing documentation, and you're welcome to register if you want to learn more about it. We are going to wait a few minutes for the latecomers or people who have not finalized their registration to join, and then we are going to start. In the meantime, I'm going to mute myself for 2 minutes, and then we're going to start properly. Yes. So hi. Sorry, I was in mute. So it's 10:03. We're going to start the webinar right now. The purpose of today's presentation will be to learn how to prepare and file the Globe Information Return. My name is Walid Eljaafari. I'm CEO at Algonomia. My profile is very multidisciplinary because I'm a trained engineer in math and quantitative economics. And at the same time, I did both economics and law degrees in France. And I have a prior experience in the transfer pricing teams of Deloitte and PwC in France, and also some experience as an economist before founding Algonomia. My partners and I, we founded Algonomia in 2017 to build solutions for international tax departments, mainly focusing on all of the BEPS Action 13-like issues like transfer pricing, like CBCR, now Pillar 2, but also a lot of tax reporting. Our customers and partners are currently a lot of French multinationals, and we're growing our international customer base right now. And at the same time, we are trying to involve ourselves in the tax community by partnering with academic institutions, such as the EDAC in France, the EDEC Business School, and we recently founded the Open Tax Society to share some of our research work with the entire community. Algonomia is a firm that serves a wide range of clients, from very small groups in the context of Pillar 2, if you want, that range around 800 million euro of revenue to huge corporation that would reach 85 billion euro in revenue. Some of our clients reach up to 4,000 legal entity and permanent establishments to manage, and some others have only 20 such constituent entities. Our solutions are used by local users in more than 160 jurisdictions across the globe, and for a total of more than 2.5 thousand users. So it's a wide range of people contributing to international tax compliance through our solutions. So it's really interesting to have all of these people with different background come and join and have the same contribute to the same processes and to the same goals. Our motto is to give back a lot of control to the tax department. In the past decade, there have been a lot of developments for the finance department with business intelligence, with all of the data science, big data, and so on, that has come and served a lot in IT finance. But a lot of times, it's been not a great thing for tax department that have been a bit left out. And so our goal is to bring a solution that gives back the power to organize, to break the dependencies to the finance departments that may exist, break the dependencies to external consultants if you are used to externalize a lot of your processes, or sometimes even ensure that your internal team is able to manage the processes correctly. So that's our real goal. It also means that our tools also make you independent from us, meaning that you are able to configure and reconfigure it the way you want without actually needing to constantly pay again consulting fees to modify your configuration. Our ecosystem is based on two main components. On the left side, you can see what we call the Leaf platform. It's a workflow and data hub that allows you to collect your data either manually from local users if you want them to fill in some tax packs or collect some data that is not present in the ERP systems. And on the other side, you have the ability to connect to the ERP systems and siphon the data that you need directly. It is really important to be able to do that in the context of Pillar 2, and we will have the chance to talk more about this. It's also a collaborative platform, meaning that everybody can have access to the data that they are entitled to review or understand, and you can organize the tasks and processes of each team members depending on their scope of action. You have also the ability to organize the calendar, meaning send reminders, send emails, and structure the workflow so that everything happens at the right moment. Once you have gathered this data, you have the ability to feed it to the different applications and modules that we propose. We have in this slide divided them into two columns. The right-hand column is more all of the BEPS and Pillar 2 issues. So Pillar 2, CBCR, ATP Leaf is more about transfer pricing automation and the transfer pricing documentation with ATP Leaf. And on the left column, you can see tools that are more dedicated to tax accounting, effective tax rate management, the tax footprint analysis, and the management and provisioning of tax risks. These applications are dedicated to treat each of these use cases from end to end. So we want you to be able to treat them by gathering the data, running the different computations, standardizing the processes, and at the end, produce the output that you may need. From the transfer pricing perspective, it means producing all of the TP documentations from which you have built a standardized template. For the Pillar 2 and CBCR, it would be more aligned with the ability to file the CBCR, to file the Pillar 2, but you also need to do a lot of computations and modeling in both cases. So our solution is different from what you can find elsewhere in the market, in that the data that you've collected for your compliance processes can also directly be used in order to perform tax modeling, either for transfer pricing, for example, if you want to assess what would happen if you change benchmark, if you change the principles, if the tax systems, for example, in France, it happens a lot, as you may have heard. Well, if you want to know what will be the impact of the change in the effective tax rate of the group of the changes in different tax systems, you can do that with our applications. For the CBCR and Pillar 2, it's the same idea. If you want to reorganize your group, if there are changes in your shareholding structure, if there are, I don't know, if you purchase another group and need to incorporate it, you have the ability to run simulations and understand what will be your impact on your top-up tax without having to reinvest the same quantity of setup time as for your complete compliance processes. Now, more about today's discussion. We are going to talk a bit more about the preparation, the filing of the Globe Information Return. First, I'm going to go back on some of the latest updates on Pillar 2. It's going to be a bit old because there has not been that many updates with regard to what has been shared with the OECD from what we've seen. So it will date back from the IPA conference in Lisbon. Then we are going to talk about how to prepare the Globe Information Return with our solution from Algonomia. But I think a lot of the elements that you're going to hear about also apply to the general Pillar 2 processes anyways. And finally, we are going to talk about the filing of the Global Information Return. We're going to focus on the French case because, well, first, we're based in France, so it's the one that we know the best, but it's also very analog in various countries. And France is one of the worst examples because of this specific technology that they have in order to share some of the data files compared to other jurisdictions that do everything in XML already. And finally, we're going to talk a little bit about the QDMTT calculations and also filing, and then move to a live demo of all of the subject that we will have talked about. So let's talk about the latest Pillar 2 updates. So during the IPA conference, it was very interesting for us to go there because we learned a lot about the agenda of the OECD teams. They shared this timeline. Of course, you know that it's been a journey since 2021 with all of the model rules, commentaries, all of the safe and all of the administrative guidance that have arrived. So already for us as a software company, it meant a lot of updating of our computation algorithms. And in 2025, the agenda was a bit heavy, especially in the second part of the year because of what happened with some countries that have want to distantiate themselves from the inclusive framework. And so you have this side-by-side system comparison that is being discussed right now, and for which we may have important impacts on the incoming Pillar 2 process. In terms of jurisdictions that have implemented Pillar 2, the OECD is already sharing on their website an updated count of all of the various jurisdictions that have implemented it or have a QDMTT or have a QIR or a QUTPR. So basically all of this is available. And they have made this synthetic slides showing that 56 jurisdictions have enacted some kind of minimum tax and with various degrees of completion. And they've shared the updated list of the countries with the different components of the Pillar 2 model rule that they will implement. As you can see, it's a fair number of countries. It's not only European countries, it's mostly European countries, but there are also countries outside of Europe. The most important element from our standpoint was this communication about the permanent safe harbor. They were underlying the major simplifications that will happen in terms of computation and in terms of data collection. And the very important elements are the simplifications for a lot of adjustments, even though it will not be as simple as the current safe harbor. We can still see that the computation may be done at jurisdiction level, which will allow for a lot of simplifications for groups that have thousands of entities. And on the other side, you can also see, and that's an important point, that companies will have the ability to qualify again to the safe harbor once they've been out. So these are the key elements. There's been already discussions with the OECD about the permanent safe harbor, and we are trying our best to contribute with some modeling on our side. In terms of local filing requirements, I'm gonna dive into a bit more detail by using the French example. So basically, you have the Globe Information Return. The deadline for the Globe Information Return is quite common for jurisdictions for the fiscal year 2024. It will be June, the 30th of June 2026, but I'm not teaching anything to anybody by sharing that. What we have seen is that other jurisdictions may have other forms of filing that may happen either before or after this deadline. In France, they have built a notification that for which the purpose is to declare that an entity may be part of a Pillar 2 multinational enterprise. And it's called the Group Affiliation Notification, la déclaration d'appartenance. And this will have to be submitted per constituent entity in their global tax filing. But it was supposed to happen in May 2025, and the same type of deadline will be expected every year. Other jurisdictions have taken the same route, and so it's interesting to monitor how this will play in the end. On the other side, and that's not completely entered into play yet for a lot of jurisdictions. Some jurisdictions have requested advance payments, but most haven't. And for France, in this example, there will be a top-up tax return to file that will contain, it's called relevé de liquidation. It's about the payment. And inside, you will just declare for each paying entity basically how much it will have to pay and for whom it will have to pay for what reasons. In France, both of these filings will not be submitted using an XML method, but will have to be transmitted using the French technology that is called EDI that we are able to use to send these filings. Now let's talk in more detail about the Globe Information Return. France is a specific case because it's a rare situation for France to have to manage XML files. So they have built a dedicated interface in order for users to load their XML file. They will have to subscribe to a new interface to register, to have the ability to use the Pillar 2 filing. It is almost the same process in other jurisdictions to file an XML. And the idea is that it's necessary to be registered in order to be able to file. I have heard that some people were trying to connect. I don't know if they're still in the waiting room. I'm authorizing them and going back to the slides, sorry. Now, there are some difficulties in filing a Globe Information Return. The first difficulty is that there is a maximum size for the Globe Information Return. For most MNEs, it will not be a problem because the limit is set at 20 megabytes. For a file like an XML, it is complex to reach this limit. However, if you reach this limit, it means that you will have to segment your file into coherent and compliant batches of 20 megabytes each. And that is a big complex because it means that you will have to manually load in the interface sequence of a file in a coherent manner. And from the filing mechanism standpoint, it can be error prone. You may, I don't know, name one incorrectly or put them, forget one or this type of things. And this may be problematic because the error management, I have not gone into detail with regard to the error management, but the error management is a bit complex too. It is not manageable directly in the interface. It's within the content of the file that some of the features of the error management are supposed to be written. After you have loaded your globe information return, at least for the French interface, you will get what is called a CRM, a business receipt confirmation that will contain the validation statuses. So the OECD has shared in July the content of the different error messages for the various cases of either blocking or not blocking errors. We're going to talk about that a bit later. And the administration will respond to the loading of the globe information return by sharing with you an XML file that contains this validation message. You will have the ability to store the globe information return for 6 months in the interface as a history, but it will not be longer than that. Now let's talk about how to prepare this globe information return and also the additional filing that you may have to prepare. In terms of methodology, our standpoint is that organizing a data collection process for Pillar 2 is a good opportunity to reorganize your tax accounting process and ensure that this tax accounting process with the requirement of both the CBCR and the Pillar 2. That is why we are serving our solution in combination with our CBCR solution or our tax accounting solution. So depending on what you already have in-house, maybe you already have a tax accounting tool, or maybe you already have a CBCR solution. So depending on what you already have, you may want to onboard as many of the data collection process in this unified data collection process to minimize the number of requests that you will send to your teams. Sorry, I have someone else who's trying to connect. So I'm gonna go back. One more element that is important is that you want to ensure the coherence between all of these elements, your financial account reporting, your CBCR, and your Pillar 2. And by having a unified process, you ensure that it will be impossible to have inconsistencies between the files. Now, again, in terms of methodology, we have discovered and interacted with a huge variety of international groups for which the way to manage Pillar 2 can be very different. So basically, depending on if you have a simpler structure, meaning fewer than 50 entities, the UP owns everything at 100%, all the constituent entities are simple and don't have any specific or special characteristics. There is, for example, not many permanent establishments. Well, in this case, it's quite simple to manage the scope, the perimeter, the charging provisions. Most of the time, if you have some top-up tax to pay, it's going to happen in the UP. Also, you will not have many joint ventures or minority-owned subgroups to manage. So basically, it's quite simpler. And almost what you can do, you can almost manage everything directly with the simple linear computations. However, there are some cases where the number of entities is above several hundreds, where the shareholding structure can be very complex, where you can have a lot of external ownership and also some circular shareholding structure that happens. It can be weird, but we have seen that, and a lot of entities with varying characteristics. And in this case, it becomes really important to structure the data collection process for both the financial data. A lot of people focused on this financial data, but also on the data with regards to the shareholding structure. So ensuring that every year you get the most up-to-date data for the list and characteristics of entities to organize the computation of the scope. On the other hand, with regard to the availability of data, you can also have varying profiles. You can have groups that have everything in a monolithic, organized, structured consolidation tool where most of the data can be gathered automatically, already split by permanent establishment, for example, and easy to gather. Or you can have groups with consolidated subgroups where you need to resplit everything manually, where you have missing information. And so for all of these difficulties, you have not everything is either white or black. You also have a lot of shades of gray that exist. And so the idea is to configure a solution that is going to be the most time efficient and the most cost efficient for your team in order to gather the data, run the computations, and prepare the filing. And what is really interesting with the solution that we propose at Algonomia is that you can organize a process where very simply you load everything by Excel centrally and you run your computation and do your filing. Or if you want to have something a lot more complex, if you want to gather data from your ERP, ask from your local user to either review or collect the missing data. And if you want to run complex computations, you can do all of this in our solution as well. So basically, it allows you to create the perfect process for you, and it's not very difficult to do it. Most of the time, we propose to do this through what we call a proof of concept, where the groups sign an NDA with us, and load the data by configuring already for them, and they can see how easy it is to configure our solution in a way that corresponds to their group's needs. So don't hesitate to request that from us. So in terms of process, as I explained before, if you want to go into this automatic extraction of data, well, you will have a lot of different sources from which you will want to gather data. First, there will be the financial reporting tool, most of the time the consolidation tool for the financial information, either only for the CBCR level data and from the data that are necessary for the simplified cover tax. And for these, it will be most of the time the consolidation tool. For the CBCR, and sometimes also if you don't have the dedicated field, you may want to gather the number of full-time equivalents or the payroll costs that you want to gather from the dedicated solution. And you also may want to gather the information from the legal structure management tool. It is possible with our solution to connect to all of them automatically and gather the information at the right moment in the computation process. So basically, you would not have to gather everything all at once or have your user contribute and review everything. You can do it in a step-by-step process and then do a dedicated and a very precise data analysis for the entities that are not covered by the safe harbor. On this data collection needs, it is really important to organize a progressive standardization process. So basically, in your perimeter, you have entities that are the core entities of your business. Most of the time, they are perfectly depicted in your consolidation tool, or there are just some accounts or some elements for different adjustments that are missing. And for these, you have the ability to gather the data automatically from the consolidation tool on one side, and then maybe add some manual completion for some of the adjustments. But for some entities, you may not have any of the information in any of the tools. You may need to request information directly from the people in charge, the local accountant, for example, in these entities. And what is interesting with our solution is that you have the ability to create a process that will bring together all of this information depending on the level of automation that you can organize for these entities. Of course, this is focused on very large perimeters where you have, I don't know, several hundred entities that are in the consolidation tools and others that have to collect manually. But it also applies to groups that would not have the right quality of data directly in their consolidation tool. And for them, you can just, if you need to, create a manual data collection process if you need. Finally, in terms of actual functionalities to gather data, as I explained, our solution is very, very configurable. You can have Excel imports, you can have retrieve from the ERP systems. You can also ask your users to fill in values manually or review them, and you can ask them to attach proofs. For example, proofs of payments, analysis on the computation of a value. You can ask them to give details on a number of information or commentaries. And that is really important to anticipate any audit phase and to keep the quality of the information that you gather. We know that some of our clients have, for example, to gather information from remote entities that they don't interact with very often. So, for example, loading the financial statements of the entities as a proof or the tax return as a proof can be a way to ensure that in case of audit, they have all of the requested documentation. Another important message is that the way that we provide our solution is one of the most secure way that can be on the market, because we dedicate basically servers in the cloud for your entity and your entity alone. Of course, it's all on cloud storage based in Europe, but the idea is that the infrastructure that we provide, it's not shared with other clients. Once you have your instance of our solution, there is no possibility for any other group or any other client to share the same either URL or the same database, which may not be the case with other providers. So in terms of security, there is no mix between our clients in the same instances. Now let's move to the computation component. You all know that the computation can be cumbersome, and our computation algorithm goes through every single of the computation steps, from the analysis of the scope to the generation of the XML. And we also, of course, run the safe harbor computation and the detailed top-up tax computation based on the adjustments that you have gathered. We also run all of the charging provisions and the UTPR computation, so that in the end, you're able to generate your Globe Information Return filing. And if you want also to run the QDMTT computations in our software, it is possible to configure it to do so. We will look at that a bit more in the real life demo, but what is very important with our software is that you have the ability to reorganize the standard visualization of the computation so that it matches your interests. And the most important feature is that you have, if you connected your tool to your ERP systems, you have the ability to drill down to the actual accounts that fed, or so here it fed the financial accounting net income or loss. But in other cases, you could see for each adjustment which accounts you used or which data source you used to generate this value. You also have the ability, if you organize the data collection per entity, to see the detail financial account per entity and see what were the values connected and actually interact with the people who may have reviewed or collected this information, because each task in our software is linked to a repository and a small discussion where you can interact with the people in charge. And finally, we have invested a lot of resources in order to propose dedicated visual and graphic analysis features for Pillar 2, which allow you to understand your structure, understand who is supposed to pay the top-up tax for who and why, basically, and also understand the measure and the computation of the top-up tax in order to be able to reconciliate the values between the different scenarios. We will see that in the live demo. Now let's talk a bit more about the Globe Information Return. As you can see, I don't know if you have ever opened the XSD document. I recommend, if you want to do so, if you work on a PC, to use the software called Notepad++. It's free, easy, and very simple to use. And you can already see the type of structure that this XML file proposes. We have built more readable synthesis of the document. And what is very interesting is that it's both a nested structure, meaning that you only need to fill what you need to fill if you want. So basically, when you build this jurisdiction element, you will only have to give the details for the elements that are not covered by some of the safe harbor. So this nested structure exists. However, what is really important to notice is that there is no such conditionality for the corporate structure, and it means that you will have to disclose the entire corporate structure of your group, whether or not the entities are covered by the safe harbor. And this XML, I will open a mock XML file for you a bit later. It's quite long and can be quite cumbersome to analyze manually, and this is why we have built a visual interface for you to be able to generate it and read it. So in our structure, what is really interesting is that you can build several computations and compare them. And at the moment of the filing, you will have the ability to select which of the computation you want to use in order to generate your Globe Information Return. So the real one, if you want. And this allows you to build and generate automatically this Globe Information Return. You have this tree structure that is generated that allows you to navigate, and you will also have all of the controls that correspond to both the XSD format and the validation statuses performed automatically in the interface. Let's go a bit deeper into this validation of the controls. So basically, both the OECD and the National Tax Administration will propose various validation controls for the Globe Information Return. I'm gonna again take the example of France here. And what we've seen is that the OECD has shared blocking controls as well as informative controls, meaning non-blocking. And France has also defined different layers of controls that they've called level 1, level 2, and level 3. But the most important message here is that on one side, has added controls that are not present in the OECD roster of controls, 29 in this case, and 27 are blocking. And on the other hand, France has ignored, so left on the side, a lot of controls. And most of these controls that France has left out were informative controls. And France has also made some informative controls from the OECD. It has made them blocking. which means that some of the controls that can be non-blocking in France or in other jurisdictions will be considered blocking if you file in France. So there is not too much worries to be had on these type of controls because most of them are with regard to the file format, and of course they will be automatically passed by us at least when we generate a XML file, because otherwise what we have a list of them and it would not make sense to generate a file that does not comply in terms of format. But the idea is that the local jurisdictions can take some freedom on whether or not some controls will be added to the roster of blocking controls from the OECD. Most of the blocking controls are from the OECD are format controls. So basically, they are judging the coherence of the structure of the file and of the naming of the file, of the organization of the file, the messages content in the file. And most of the substantive controls stay informative. For example, on evaluating the totals, evaluating the computations, for example, the top-up tax computations, but they don't go much beyond that in terms of complexity. And these are the ones that France has moved from informative to blocking. In terms of interface for us, a lot of the controls will be formatic controls, and you will be able to see directly in the interface whether or not you pass them or not. You will not be able to file the global information return or export it to be filed if you have not passed all of these controls. So you have all of the mandatory values, you have all of the formatting errors, you have all of the typing errors. And on the other side, you have all of the validation status that you will have to pass, meaning the more complex controls for which we need to run an additional script. And this additional script will give you an information on whether or not the XML file passes these controls. Now, let's talk a bit about the actual filing process. I'm going to be a bit faster so that we can spend a bit of time on the demo. So basically, during the year N, you will have to collect all of this data. And most of the times you will want to be able to compute the provision for your top-up tax computation to be put in your financial accounts. And that is something that we can organize in our solution where you can have two parallel processes. One process that allows you to gather the information only from your financial accounts to compute your provisioning. And on the other side, in FYN+1, have a dedicated process that allows you to gather the information that will be necessary for the final computation, because you will have more detailed information on your statutory accounts, on your tax footprint after a while, after FYN+1 has been almost completed. During the year N+1, you may also have to run some preemptive computations from which the result may differ from the final filing because you may not have all of the information. It was the case, for example, for Belgium, but they have moved the deadline to June 2026. But the idea is that you may have to create an additional parallel processes for different levels of computation. In terms of this dedicated filing, I'm here again giving the example of France, but this can be reproduced for different jurisdictions. You can see the detail of the notification of affiliation on one side and the relevé de liquidation on the other. So basically, the belonging to an MNE subjected to Pillar 2 filing and the filing related to the payment of the Pillar 2 top-up tax or the QDMTT in France. And these are elements that will exist or that already exist in most jurisdictions, and that our solution can currently 100% cover in France and for which we are moving forward in terms of development for other jurisdictions. So don't hesitate to contact us to know exactly if we're able to tackle a specific jurisdiction or not. Finally, once you are at this stage of generating your globe information return, you can then export the globe information return, but you can also request to export or to send for the French administration, for example, it will be an online filing directly, or to export the other filings that can be exported at the same time as the main filing. Now, I will not go into too much detail with regard to the complexities of the French filing process, but the idea may be the same in some other jurisdictions. The first complexity is the handling of large files above 20 megabytes. This may be the case in other jurisdictions, so you need to be careful in the way that you will handle downloading and uploading into the interface of the tax administration. Second, the errors that you will get from the interface of the tax administration may be complex to manage because on one hand, they will be returned as an XML that you will have to read or have a dedicated solution to upload and read, such as ours. So this might be something a bit more tricky to manage. And finally, you also need to know that right now, the process that has been discussed for more complex errors after the tax administration has validated your globe information return, so the 72 hours we talked about earlier, it means that it will be shared after 6 months to other jurisdictions that may want to ask further questions. And this process right now should be done per email. And finally, if you need to declare corrections on an already filed globe information return, the structure of the globe information return is quite complex because you need to be able to construct a new XML that corresponds to only a correction with the right references in the actual content of the XML. So it can be a bit tricky, knowing that in most cases we need to first let you export this information and then re-import. So this is a complex element to manage. We have already given this feedback to the tax administrations, but the idea is that there is currently no better way to handle that from their part. Finally, we also proposed, but that's mostly for French companies. We can also discuss it with third parties. What are the best ways to manage the declarative process and which are the pros and cons? So the first element is that you could file yourself. So basically, you generate your globe information return without a solution, you export it, and it means that you have control on the filing process. But on the other hand, it means that every time that you're going to have an interaction or an error message, you will have to manage all of these errors yourself. What advisory firm can propose and what we can also propose is to manage the filing with a specific delegation. And in this situation, it's of course a bit more expensive because you need to pay for this type of service. However, on one side, if you work with an advisory team, you may have the ability to have someone managing the substantive errors. And if it's with us, we may have the ability to manage the more technical errors directly. We can also offer something combined, if need be, with some of our advisory partners. Finally, let's talk a bit about the QDMTT before going into the demo. Well, in terms of QDMTT, there are specific elements that change. First, you may need additional data sources depending on the jurisdiction for which you need to compute the QDMTT. Namely, you may need to collect the local gaps and the statutory version of the data, as well as maybe some other information not usual for the global computation. You also will have to adapt the computation rules, and our solution is able to do that depending on the various jurisdictions. And finally, there might be some specific filings in each jurisdiction, and it may be either a completely different filing or an additional filing, such as in France, where the QDMTT filing is the same filing as the payment statement. Okay, so I'm gonna move now to the short demonstration of our solution. The idea is for you to see the various features I talked about. So here we are on, I'm gonna verify that I'm still connected, sorry. It's important. Right. I'm really sorry. After 1 hour, I was logged out. So here we are on our demo instance of our Algonomia solution, so the lead platform. You can see here the transversal functionalities we talked about, so the organization of tasks and processes, the organization of data collection, and the ability to attach document and explore all of the documents that you've gathered. I'm going to move to English, maybe simpler to everybody. And so all of these elements are shared across all of the applications that can work in a unified way. And if we enter the Pillar 2 application, you can see that these core functionalities still exist because they are transversal. They exist in any kind of processes. And we have then added functionalities that allow you to tackle the specific use case. If we go in the CBCO application, you will see that there is no graph analysis for the shareholding structure, of course, but you still have the ability to oversee the data, manage the data that you collected, and work on the filing process. And these three core functionalities that are transversal are always available, and they allow you to unify your data collection processes. Now let's go into more detail in this data collection process. We have set up a lot of examples for Pillar 2 over the years because, well, we need to create examples and run our computations. The one I want to show to you is this one because I have organized a fragmented data collection process where I have gathered the financial data per entity. So you can see there is one tax pack, if you want, per entity, where each entity gathers its financial information necessary for the Pillar 2 computation. And well, you can see there is a lot of data points, all of the data points for the adjustments and so on. And what is very interesting is that you have access to these collaborative features I talked about, meaning the different exchanges or the validation level of this task. You can export it, you can translate it, you cannot finish if the data that you want have not been gathered, and so on. You can also share the link directly to another user if you want him to contribute directly. You can also see the history of who modified what value in the account. Another element that is interesting is that in the same process, we have prepared a centralized data collection process, this time for the shareholding structure. We could have gathered the data in an unstructured manner, but we decided to gather everything in a single component. And so here we just loaded an Excel with all of the values to analyze the parameter structure here. And you can see it's a one single table. And so the idea here is that in the same data collection process, you can have the financial data collected per constituent entity and the group structure gathered per entity. We also gathered the jurisdictions per the elections per jurisdictions. So basically, you have this ability to organize the data collection process at the level that corresponds to what you need, and you can fragment it the way you want. Even for this table that was collected at entity level, in this case, we had two entities that we considered as being not consolidated entities in our example. And so in this case, well, they have collected their shareholding structure in a manual and completely independent way. And so it's the same data points, but it's collected in a single return. Once this data is collected, you can call it and unify it in this Pillar 2 application. So the one that we use for most of our demos is this new process test. And what's very interesting in this case is that it will be unified directly. You do not need to build exports to try and join tables, to do VLOOKUPs and all of these. No, everything is gathered automatically, and you have both the entity characteristics and the calculations that are, and the financial data that are computed, gathered at the same time. And once the data is gathered, you can see here a button launch algorithm. And so what it does is that it launches our Pillar 2 computation to resolve all of the values that you may have to declare based on these initial values. And so in this case, well, you can see that we computed the indirect ownership interest. We also computed all of the groups analysis. And in this case, it is whether or not an entity is a POPE or not. You also have whether or not the entity is in a Pillar 2 subperimeter. And right next to it, you have the top-up tax generated. And that's one of the important features of our solution. It's that in terms of how you want to view, how you want to analyze your Pillar 2 computation, you have a lot of freedom. Of course, when we set the solution up with you, we can do something quite standard. But if you want to have specific views, specific data tables and manners to analyze your Pillar 2 computation, you can do it. And of course, well, you have the entire ownership structure of the fake group that we're presenting. You also have the list of subperimeters that we have identified. And then in terms of calculation, you can see here all of the independent baskets that have been created. And for example, main is when there is no subgroup, it's the normal basket if you want. And so here you can find the French basket and see that it's covered by the transitional CBCR safe harbor based on its effective tax rate. And you will also see the detailed computation as well as the different results. Okay. Now let's go into the graphic visualization. I see that we don't have much time, so I'm gonna be a bit faster. So you can see here that we gather the entire structure and we give the ability to understand how the subgroups are built and constituted. And if I click on Poland, I can understand its position in the group structure, and this will lead for me to understand who is going to pay in the name of who in terms of top-up tax payment. I'm gonna go very fast in the global information return generation process. So here I can generate a global information return, and here I will have a timeline because as you know, there are some elements that need to be conserved and managed throughout the time, especially when there are some recalculations. And in this case, we have generated the global information return. You've seen there is not that many data available in our example, but we can still generate the global information return. And as explained, you will have the entire structure available. So let me open it. So let's look at the corporate structure, and you will see for each of the entities, well, it's information. And if you want to go deeper and look at the ownership structure, you will be able to see who are the owners of each entity. Okay, and then you have also the different errors based on the OECD framework, and see whether or not the file is correct, knowing the data value that you have collected. You can then do the exporting under the globe information return as XML, and let me show you how it looks like. It's not a very agreeable file to analyze, but here, this is what an XML file looks like. And right now, we are in the process of finalizing the validation of this global information return, knowing that we've been able to generate them for months. But now the idea is that in France, uh, the, the platform to validate the global information returns to be filed in France will be open in April. And in some jurisdictions, such as the UK, we already have the ability to interact with the administration. Okay, I'm gonna give the time for some question if you have some time for them. You can write them in the chat. Sorry for the last part of the presentation. It was a bit rushed, but the time was flying. Or there's some questions. So I have a question here. If a group has presence in multiple jurisdictions, so the question is about the different gaps that can be used to generate the globe information return. On this type of question, we recommend that you ask your advisors, because we are not tax advisors. But from what we understand, at least for the global computation, it's important that it's the group gap that is used. But again, we recommend for this specific substantive questions that you ask more your own advisors. Do not hesitate to ask questions either in the chat or in the Q&A. I'm gonna wait 1 more minute. If there is no question, we're gonna be able to conclude the discussion. Do not hesitate. Okay, as there are no questions, I thank you all for joining us for this webinar. Do not hesitate to contact us if you want a dedicated demo, or if you want to organize a proof of concept with us with your own data to understand how our solution would apply to your company. Thank you all. Bye-bye.